Welcome to Texas Capital Live. My name's Steve Kennard. I'm the president of the AI Innovation Association. I'm joined by my co-host, Lee Bratcher, president of the Texas Blockchain Council. And we have our producer and entrepreneur in residence, JBA, joining us as well today. And Lee, the markets have been a little bit quiet today. Not a whole lot of excitement in terms of the stock market action today, but a lot of excitement in the M&A landscape. And so we want to start out talking about all of the hubbub around the bidding war now between Paramount and Netflix for Warner Brothers. And so we've seen back and forth. This is kind of headlines in the Wall Street Journal. It's the leading headline says, behind Paramount's relentless campaign to woo Warner and Discovery and President Trump. And what I think is interesting is now we're starting to see this political angle come into play. The most recent winner in this bidding war is Netflix, who most recently came out with the announcement with an all-cash offer at $77.9 billion that was ostensibly accepted by Warner Brothers, and immediately started to kind of take fire from different angles of people with this political angle that this would create over concentration in terms of content creation and distribution, that it would create a company that is conceivably biased perhaps against the president. And then in this light, people kind of indicating that the Paramount side of this bidding war would be friendlier to President Trump, since the CEO there is David Ellison, the son of Larry Ellison, founder of Oracle, that's been a long-time Trump donor. So expect this kind of increased heat to be applied from this political angle that could the Trump administration review and disapprove of a deal or of allowing a deal to go through on antitrust grounds. And then, of course, Paramount isn't sitting around waiting to see what's going to happen. They've come right back with a higher bid themselves, and interestingly, including all of the companies. So the original Netflix focus had been on just the studio and content creation side, not the cable news part, which is CNN, Discovery, and some other channels. So Paramount now coming back and just saying, we'll take the whole thing, even the parts that really nobody wants. So kind of we'll take the trash out for you sort of situation.
I found it fascinating that there's a $5 billion breakup deal clause in the Netflix bid. So if this thing gets shot down by the FCC or any antitrust regulators, $5 billion just Netflix pays to Warner Brothers.
So that's a bold statement of putting your money where your mouth is around, we think that this can get approved. I have to say, I'd have to lean on the side of Netflix, both from who is the more logical buyer here. And I've kind of said this before, that you're talking about like the HBO catalog of shows. Who's better positioned to monetize that through distribution? It has to be Netflix.
For sure.
There's nobody else.
For sure.
Then they've got this $5 billion breakup fee, because at the end of the day, it's only getting cheaper, easier, lower barrier to entry to create content and distribute content in this world. And so even if you have, blockbuster brands like Harry Potter and everything that HBO has done, continuing to create content and earn and maintain that distribution stronghold that Netflix has is only going to get harder. For that reason, it feels like it's going to be a tough pitch to say the government should break this up. Would have made more sense in the last administration, where they disapproved of basically any M&A period in all industries. And I think the tenor that the new administration has been trying to strike is kind of America's open for business. And denying this transaction would seem to fly a little bit in the face of that, but it's going to be tough given the characters at play here.
And there's really no risk to the Trump administration from this, because this deal is going to take 2 years to iron out.
Right.
I mean, the administration will essentially be over at that point.
And how many other chapters of like breaking it up or spinning this off or whatever could come in this. And so I'd have to agree with you there. It's hard to kind of, at this point in time, just say, well, we'll complete a review and deny it, like based on what grounds. The other studios, Comcast was in the hunt here at one point as well for this deal. It's not like they're going to sit still either. And so you're going to see more investment, I think, in startup studios and distribution and everything that has to do with content and media. Be that as it may, the controversy is going to continue to boil over here, and David Ellison and Paramount showing that with what seems to be a pretty aggressive bid coming back at this, and at least I think would elicit some kind of response from Warner Brothers and their board. I don't think they can just say kind of pencils down, this is done, we're moving ahead with Netflix when you've got a higher cash bid on the table for all of your assets. So we haven't seen that response quite yet.
Yeah.
Social media is ablaze with all of this. I think it's hard to say where this all shakes out, but hard to see how, if push comes to shove, Netflix wouldn't come back higher.
Right. Yeah, I think this investors are responding in such a way as that they expect the deal to go through.
Yeah.
If you look at what the stock prices did for Netflix and Warner Brothers in the run up to this,
which in itself is a change, because I think at one point they're saying we don't want to be sold. This is kind of an aggressive external bid. Now it's moved towards someone's going to take this down.
Mm-hmm.
Who's it going to be? So there's been an evolution there for sure. All right. Well, moving on, we want to talk about friend of the show, Iron, a company that's been on the show before, big investor in Texas. And congratulations to Iron on closing a $2.3 billion convertible note offering. I think this is interesting with the backdrop of all of has the AI bubble burst kind of discussion that we've seen in the market in recent weeks, and a lot of the skepticism, frankly, about the ability to finance some of the very aggressive build-out mandates that the more household name AI names maybe have. And here's Iron kind of showing like the market still is very supportive of investing in a build-out when, like Iron, you own the land and you've got the infrastructure to actually deliver the gigawatts that are needed. Worth mentioning here that this convertible note offering is being used in part, $544 million of it, to repurchase other outstanding convertible senior notes that were at 3.5% and 3.25% coupon rates. These new notes at 1% and 0.25% coupon rates. I highlight that because you've got clear indication from the market. Basically,
we
like what you're doing,
exactly,
and we want to keep seeing the build out, and the cost of capital is coming down.
They're getting oversubscribed, which is why they're able to retire the older debt for cheaper debt. Why the difference? 0.25 for notes maturing in 2032, but 1% for notes maturing in 2033. Both of those dates are pretty far out, but there's a 0.75 difference.
It's a fair question.
I mean, I would have thought like 0.25 and 0.5. Just 1 year. One of them is 6 years away, and one of them is 7. So I don't know what that's about. But
that is interesting. Worth noting, on the notes they were retiring, the 2029 notes were at 3.5%, the 2030 at 3.25. So you're right there that the spread to have one more year of maturity seems like it widened out, which is somewhat difficult to explain. So.
Could be the oversubscription piece, and people that got in on the 2032 notes, there was just so much demand.
Yeah, just pushed it down.
Yeah, just pushed it down to 0.25.
Yeah. Any way you slice it, it's a win for Iron. It's a win for Texas, where predominantly their assets are. But I think it's also a win for the whole energy and compute infrastructure landscape that the industry is chugging along. If you're able to show you can actually deliver the gigawatts. I wanted to reiterate a headline from a few weeks ago in the Wall Street Journal. AI data centers are banging on crypto's door. Of course, Iron started as a Bitcoin miner. So many of the neoclouds and the people that are really building out this AI infrastructure boom were former Bitcoin miners that are finding better and more stable revenue sources in AI. And then as this transaction shows a capacity to fundraise at a much more attractive cost of capital. Of course, Bitcoin miners after the last downturn kind of predominantly have been more equity financed, been hard to tap into cheaper cost of capital and more, debt or convertible note type of structure. So we're seeing a big evolution in kind of what the capital stack looks like for the big Texas infrastructure build out. I expect more to follow on the heels of this Iron transaction of showing that this is kind of a model that works to finance this multi-billion dollar build out. So well done, Iron. Win for Texas. And I think this kind of plays into the broader discussion we wanted to have on this boom trickles down. So it's not just the cloud, the neo cloud operators themselves and the land, but also all of the ancillary services and the support that goes into this kind of huge AI boom. And then specifically, I think the one that we wanted to talk around is the delivery of the generation of power and the equipment to do that. That, of course, has been probably the most noteworthy bottleneck in recent months. It's kind of everybody's begging Caterpillar to
build more generators.
To send them generators. They're struggling to meet that demand. And so we're seeing new entrants and kind of new technology built in America coming to the fore. I think you had something interesting to share on that.
Yeah, JBA, if you would, second link there is a tweet from Blake Scholl, the CEO of Boom Supersonic. I may be mispronouncing his last name.
Sorry, Blake.
But apologies, Blake. But I think you've got lightning in a bottle right now, because they've built a 42 megawatt natural gas turbine optimized for AI data centers called the Superpower. They just did a big deal with Crusoe, 1.2 gigawatts, an order from Crusoe for 1.2 gigawatts worth of capacity. And we did a little bit of digging and some math and kind of figured back of the napkin that they are probably pricing this at around $1 million a megawatt, based upon some news that we used AI to pull out from some public filing that said that they had back orders for $1.2 billion worth of equipment from a single customer. Well, then he's tweeting about 1.2 gigawatts from Crusoe. So that's 1.2 gigs for 1.2 billion. That's $1 million a megawatt. It's if they're time to market. I mean, the product looks sexy as all get out.
Well, just the optics here, the name Superpower and the product presentation itself. Okay, 10 out of 10. Well done.
And the fact that they are pivoting from a jet engine company to an AI, gas turbine company is pretty profound.
So nailed the pivot. It's amazing as well to see new companies come into a space that historically was like only the Caterpillars and Siemens of the world,
right?
And GE could possibly build turbines because it's so complex, because it's so capital intensive, and there's long lead times and all of that. And so this AI boom really kind of flips that on its head and just says, who can meet the demand, who can innovate? Because in the good old days of, 2022, $1 million a megawatt for generation capacity maybe would have been considered, pretty
expensive.
Rich. I think people would be happy to stroke that check now, and that's what you're seeing from. It looks like Crusoe's the first big customer for this. Crusoe also originally incubated as a Bitcoin-focused company, now one of the leading AI infrastructure companies, and also has successfully raised an enormous amount of capital. So it makes sense they would deploy it into something like this.
Yeah, and it's interesting to see that there is that $1 million a megawatt for power is a bit of a premium, but we're seeing that the market is accepting anywhere from $400,000 to $750,000 per megawatt for traditional diesel generators.
Yeah.
So
where your marginal cost a lot higher, the cost of diesel as a fuel versus gas a lot higher. So that's part of the attraction and willingness to invest more in this turbine technology.
Yeah. Natural gas is a little bit high right now, for $4.50, I think.
And a lot of variation regionally.
True.
On
that's true. If you're in Louisiana, it's $4.50.
You don't want to be there.
If you're in West Texas, it's like 50 cents.
That's where it fluctuates wildly.
What's the hub name again in West Texas?
Waha is the hub in West Texas. The worst place to sell your gas if you're a producer. The best place to buy it if you're an AI data center. And I expect more and more of this infrastructure to be deployed in that area for that very reason, and also for more and more gas producers to look to AI infrastructure builders as an offtake instead of selling into that Waha hub. So maybe that pricing there becomes more and more relevant because you have like some kind of long-term offtake deal. And so the whole kind of energy value chain is being rethought. But what's facilitating that is products like this Superpower product, and this is an if they can actually deliver on the timeline that people are expecting this by. And I'm rooting for you. Blake and Superpower. We need it. America needs it.
Yep.
And for Texas to deliver on kind of the vision that we've all had here, that this could be the energy infrastructure, really mecca of the world. We have been that. We can take a next step for this kind of age of AI. This has become the pain point. It used to be the substation. You couldn't get a substation. It used to be chips at one point. You couldn't get the chips. And those are still considerations in the supply chain. But most recently, the single thing you hear people talking about, we cannot get generation online fast enough. So
or transformers or substations. It's electrical infrastructure.
It's always you're moving between like, where's your biggest pain point?
Right.
And so there's so much opportunity there. And we want to make it in America and hopefully in Texas. Hey, we'd love to see these manufactured here. And just an outreach here to the team that's building Superpower. Bring it to Texas. We're rooting for you. We'd love to be a resource to make that happen. Build it here, close to your customers.
Absolutely.
All right, let's move on to the next thing. I wanted to highlight something that has been a more recent trend around ChatGPT. Now, taking a step back here, ChatGPT's been, the dominant household name of AI. GPT-5, the most recent release, maybe didn't knock the socks off of everyone. I thought this post really showed an interesting trend here. This is from the Market Ear. ChatGPT's global monthly active users grew by only 6%, so still growing from August to November. Okay, but most interestingly, Gemini in that time jumped over 30%. Wow. This is part of kind of the next chapter in a discussion we'd had before of all of a sudden the market has shifted from like the inevitability of OpenAI dominance and the irrelevance of Google. Because not that long ago, I mean, that was like the going line, like Google's missed it. Google's out on the AI thing. They've come roaring back, and with the most recent model, particularly on the image generation side with Nano Banana, which is a funny name, I have to admit, because I've been playing around with it, I'm like, this is really impressive and appears to have carved out a market leadership position. It's also really easy. The user interface, the usability of it is fantastic, and they're implementing it more into their massive distribution channels like Gmail more and more every day. That's starting to exert itself, and you're seeing it here in the trend of active users, and the train has kind of left the station now. It's like, how does OpenAI regain that sort of alone at the top of the mountain stance that they had? Really interesting chart here that just illustrates that very effectively. And then in the wings, you're still waiting for the next big announcement for Grok. I forget what the next, I don't know if it's Grok 5 or these numbers kind of get confusing, but that next version of Grok is going to be trained on these massive, massive data centers that xAI has been able to build. They've proven they can build bigger and faster than anyone. And that's really the name of the game on the training side. So expect Grok to take a big step as well.
Well, I think this is an existential threat for Google, right? Search is going to go away as we know it, right? So the fact that they started embedding Gemini as the first thing that comes up during a Google search, they had to do that.
They're showing the cards.
They're showing their cards, and they're probably spending a lot of money on this, and as they should. As they should.
It is an existential threat, and they have the benefit of they don't have to spend 50% or more of their time running around fundraising like OpenAI.
True.
So they've got the cash to back it up, and they're pushing those chips to the middle of the table.
I wonder if this puts in jeopardy some of those deals that OpenAI struck with Oracle and others. Like, man, are they going to be able to cash those checks?
You've seen the pullback in Oracle stock, like the kind of market excitement and just the headline nature of all of that has receded and is pivoting more to who's executing, who's delivering, who has cash flow to show, or in this case, monthly active users. And those kind of hard numbers, take away the headlines, the hard numbers are not telling a great story for OpenAI and ChatGPT moving into 2026. Hard to see how they turn that around. Still incredible product and all of that, but from the levels of where they've been, it just feels like that kind of market share is unrealistic to expect, as a going concern.
Well, let's move to our Texas relocation segment. We've got two stories to bring you on that front. Ariat, beloved maker of footwear and Western attire, is expanding their Fort Worth headquarters. Ariat, good boots. I've owned them. I've had a pair of Ariats for 10 years. I think they've got some good competition in Tacova.
Good endorsement there. 10 years.
10 years, same
Okay.
pair of boots. I need a new pair, so Ariat, go ahead and send me one. I'll wear them on the show.
The offer is official. I like it. You know, I've never owned Ariats. The boots I've had are Lucchese, also Texas brand, but
a little bit higher.
that's a major investment.
Yeah,
That was a graduation gift to myself many years ago.
probably 3x the price of a pair of Ariats. There.
Right. So there's a lot of growth, I think, in that area for Western wear,
Yeah.
exemplified by this expansion. So tell us some more about that.
Well, Fort Worth is expecting to get additional jobs. You know, this is a multi-million-dollar capital investment, but I think more importantly, it's the job creation. 150 new jobs, could be more. Fort Worth is a growing city. It's sort of the unexpected city is their marketing campaign. If you see the billboards, they are trying to style themselves in the same vein as Dallas and Austin and Houston. And I think they've got a good shot at it. It's a beautiful city. Landman was shot there, the show. I think
The vibes are good.
The vibes are good. It's kind
Very
of doing
good.
what like Chip and Joanne did for Waco.
Yeah.
But Fort Worth is obviously starting from a much higher position
I
in the
love
market.
Fort Worth.
Yeah.
Downtown Fort Worth.
It's a fun spot.
Look, I'm a Dallas guy, born and raised. I love it, but downtown Fort Worth is way better. So,
Yeah. You can't not like it. Well, pivoting to our second relocation story for here in Texas, Routeware is announcing that they are moving their corporate headquarters to Austin from Oregon. I think it was Portland. They decided can't do business in Portland, Oregon. It's probably
great
just
food, terrible for business.
terrible for business. So they're moving to Texas, and this company provides services for technology solutions for technology e-waste and recycling. So they're kind of on that cutting edge of what do we do with all this hardware? The AI GPUs once they're no longer
That seems like
viable.
a booming business here.
Yeah.
They're about 2 years out from a huge surge.
Yeah, well, there's already a bunch of Bitcoin ASICs that have been going out of style.
We've learned that the hard way.
Yeah, we got a couple of those in our garage.
Yeah, you don't hear about the pipeline of companies from Oregon as much, right? It's kind of like New York and California.
This is probably like the
Yeah.
one of the last companies they had left in Portland.
it's got to hurt. a
We've
bit.
not heard of Routeware until today, but they're coming to Texas. Portland's probably really sad to see them go.
Yeah.
And
Well,
hopefully
welcome
they
to
make a
Texas
splash in
Routeware. That's
Austin.
an interesting story. We'll have to keep a track on that because it feels like that'd be interesting to dig into more. Like, what does that market look like for hardware recycling? Because it has to be going through a huge evolution and change.
Sure.
from
And
what
a
it
lot of
was.
that's going to be geographically centric in Texas.
It makes a ton of sense. It's exactly where you'd want to be. Is kind of where's all this hardware going to be? It's moving to Texas. So glad to see it, and another chapter in the relocations and expansions, and we expect to see a lot more of that. Now, last week we chatted a little bit about our mutual bullishness on autonomous vehicles and robo-taxis rolling out throughout Texas. They've had their initial foothold in Austin, logical, smaller city, kind of tech heavy. We both believe Dallas and Houston were the biggest opportunities for expansion, and we've seen announcements there. But as far as I know, and I'm still waiting for a friend or someone out there who's watching the show, I haven't seen anyone in Dallas or Houston actually hail a ride from an autonomous vehicle, whether it's Waymo, a Tesla robo-taxi, or AV Ride, who's working with Uber. So I think they're still in test phases or in beta or to some private
Send
group.
us a video if you have ridden one.
We want that video.
We want that video. We'll air it on the show.
I will air it here. I want to go test it myself and frankly track it very closely because I am maintaining this prediction that once the rollout starts in Dallas and Houston, it's just going to go hyperbolic, and this will become a sort of ground zero for mass adoption that has typically been concentrated in San Francisco mostly, and at least here in Texas, in Austin. Now, I did want to read an interesting post from an Ethan McKenna. This guy does good work. He's based in Austin. He's got a kind of cool project of monitoring robo-taxis, and interestingly points out here still only 29 Tesla robo-taxis spotted in Austin. Not super optimistic about significant fleet scaling or unsupervised happening by end of year. We'd had kind of prior indications of 500 being rolled out by end of year. Now, this wouldn't be the first kind of
Exaggeration.
ambitious Tesla outlook. exaggeration is one word somebody might use, that maybe we didn't quite meet, though you got to respect the ambition, but still kind of significant miss here. If we're only at 29, hard to see how it gets to even 50 at this point. And he also notes here that availability has been consistently less than 50% within service hours since launch. So I highlight this because a lot of excitement around this technology, and this isn't just Tesla, it's the others we've mentioned. A lot of excitement, a lot of announcements, a lot of interest, not a lot of execution. I think that the mantle of leader of execution is still up for grabs, and I think it will be the most important part because, as we've seen with like the discussion in media, distribution and kind of followers is sticky. And once you have a network of people that have a product that works, getting them to move over to the other thing is going to be harder.
It is.
I think there's a huge prize up for grabs in Dallas and Houston between Waymo, AV Ride, Tesla. It's great. Make the announcements, pump people up, but you got to deliver. You got to actually make it available. And whoever can do that fastest and at a reasonable price is going to have an enormous opportunity. I don't know who it's going to be because as far as I can tell, no one has done it yet and everybody's talking a big game, but I do like to see the competition and remain bullish that will come to pass. That's probably one of the top stories for us for 2026.
Agreed. Well, now we're moving to Bryce's segment, product discussion. Bryce, what do you got for us today? I know it's something to do with privacy.
Yeah, so essentially there's been a huge scuttlebutt on social media essentially about Meta supposedly being the word, on December 16th is going to start reading people's private DMs as a means of training models. Now, again, I don't actually have proof of this. I just know there's a massive conversation, a bunch of people posting about it. And one post went viral. This guy shared a link and kind of went through the Privacy Center section of Meta's website. And essentially his claim is that if you go into the Privacy and Generative AI section, you can submit a request via this Facebook page right here, or not Facebook page, but this page on Facebook's website. And you can opt out of essentially them using your data. But apparently the story is you have to submit proof of this actually happening. Like you have to have actionable proof or you'll be denied. So that's why I've read on X essentially that this is, I guess, allegedly supposed to happen here in 7 days from now. But there's been no like official response from Meta on this. So
I guess I'll continue my personal policy of using Telegram and Signal and never WhatsApp. But the problem here, I think, for Meta is that the reaction here should be, surely this can't be the case. You wouldn't just opt everyone in to having an AI read your personal texts. But they've had these kind of breaches before of, surely this can't be the case. I'm thinking of a few months ago when there was a leak around discussions their AI had with minors of a sexual nature that I'm not going to read or discuss here because it was so revolting, frankly. And the company had to come out and say, oh yeah, that actually did happen, but we promised that we've like taken care of it. And it was just like such a bad look. So I'd like for that to not be the case at Meta, but the track record is kind of there of things like leaking out that look terrible, and then they got to try to crawfish it and sort of like damage control. It would seem ludicrous to me in a race to win this distribution race, to own more distribution for AI, I mean, through having users on your platform, to kind of come out with a zero privacy first kind of policy. That just is indefensible to me. So as you said, JBA, this is kind of like, there's like rumors, there's a scuttlebutt. It does seem like there's a page on Facebook. So I think we got to put it in the like wait and see bucket.
Yeah.
But it's like real bad look. So
real bad. And JBA, props to you for bringing this story in the Product Proving Ground, where you will be reviewing different products. And in this case, reviewing one of these products that many of us have used for over a decade, Facebook, now Meta. And this is a little bit concerning. So,
yeah, we'd like to see a resounding kind of rejection of that kind of intrusion, frankly, from these AI products. I think there's a lot of interest here from the Texas government, at least, around data privacy for citizens, and we've seen big settlements around this in the past. So not something I like to see. We're for business growing and investing here, but privacy is a major concern.
Yeah, I would just say they don't have the best of track records.
Yep.
So,
Yep.
Well, it looks like
thank
we
you,
do.
JBA.
Yeah, JBA bringing us the product proving ground segment. We're moving on to our guest for today, Billy Rogers, who is the CEO and co-founder of Living 202. Billy, thank you for joining us today on the show. Love the background, the Bitcoin Bee up top. Tell us a little bit about what you have been working on to get out education. So Living 202, nonprofit focused on educating people about Bitcoin, workforce development, and correct me if I'm wrong, but predominantly in rural Texas. Is that the case?
That is the case. Thank you for having me on. So we are focused in rural and underserved communities, which a lot of times those go hand in hand. And a lot of times that's also where our Bitcoin miners are. So I want to say we are not Bitcoin only, we are Bitcoin first, because there's a lot of pieces of the technology that live outside of Bitcoin that I think are really important for people to learn as well, depending on their, career trajectory. But there is this really big lapse of just people that are able to service these mining facilities. If you look at ACS or any of these other entities that service mining machines that have gone down, they're overrun, and that's a great problem for them to have, but they all need more support and more technicians. And it's an amazing field that a lot of people don't even know exist for them to get into.
And correct me if I'm wrong, but I've heard a lot of talk about just the data center world in general. They're pretty interoperable. Once you've worked at a Bitcoin mining data center, you can go work at an AI data center. Of course, you're working on different machines, but there is this kind of, I call it gray collar, right? It's a mix between a blue collar and white collar job where you have to have technical skills, but you also are doing somewhat physical labor. You may be racking and stacking GPUs or ASICs. And you're out
absolutely.
probably in the middle of nowhere. So it's a pretty good job for someone in West Texas. Talk a little bit about Living 202 and kind of the brand, some of the other like product lines that gets the word out there.
Yeah, so Living 202 was actually originally a for-profit company that we created a magazine under, really just to engage people in the community. And that really stemmed from my curiosity and questions when I first got into the industry, was through a curiosity on the energy side. And I really had all these questions that I didn't know if they were silly questions or if they were good questions, because I didn't understand the lingo. And so I felt like, surely I'm not the only person that feels this way. And so the more I got out talking to people, I started to learn like this is a real need, not just to educate people in the industry, but to make them feel comfortable to ask the questions, whatever those questions are, right? And so I started making a magazine just to get people interested, and I really saw it take off. And so once it started taking off, I had to ask myself, well, what's next for them? Where do they go once they're like, yeah, I'm interested? They need mentorship. They need apprenticeship programs if they want to work in the industry. And so we decided to pivot it over into a nonprofit, which really allows us to just get closer to the community, get other companies involved, and really grow that sector. And so our main way of getting into the community is actually through a magazine and then hosting local tech talks in smaller communities.
I love that. And there's something, a huge need. The PR around data centers in Texas has taken a turn for the worse. The general public is just getting hit with article after article about the data center coming to your community is going to do X, Y, and Z. And in a lot of cases, it's not true or exaggerated. And it doesn't mention any of the benefits of that data center coming from tax revenue for the county to job creation to tax revenue for the school district. So I think that's a big need, honestly. Getting out into the rural Texas, talking to those communities about data centers through a magazine, through a nonprofit. I could see some data center companies getting on board with that.
Yeah, and Billy, you have an interesting background as well in terms of garnering interest in this with a design and kind of artistic background that you bring to this. Talk a little bit around 202wear.io, I think is the website that you have. And one of the ways that you've brought people in is through really cool merch, using your flair for design of just making cool stuff that people want to wear. It's like start there, and then you start a discussion that way and bring people in. I think that's a lot of fun. I think it's a really cool way to start a nonprofit, and just wanted to commend you on that. So talk about that journey and kind of like how you're building the website, inviting people in, what kind of branding, like how did these ideas come to you? I feel like there's a good story there.
That's so funny. You know, as you were talking, actually, a memory came up that I had lost track of that was prior to 202 Wear starting. And my partner and I, he's in development, I'm in design, and he's always saying things that I just find to be hilarious. Like that just, you know, the lingo they use. I'm like, for example, I think the word Boolean is hilarious. Like, I don't know why, it just sounds so funny. And so I had this concept of making funny, nerdy t-shirts that were also really beautifully designed, because there's a lot of great, hilarious nerd shirts out there, but
They're ugly.
the design is, they're just so tacky. And
Right.
so that was my original concept. And then
I mean,
fell
Mining Mafia
into-
is a cool thing.
Yeah.
Mining Mafia is a lot of fun. It is not my thing though. I actually just host their merch. They're a really fun group on Twitter that are primarily investors in Bitcoin miners.
Yeah,
And
that's cool.
so I feel like anything that is really well designed, you know, has a longer shelf life, because at the end of the day, we're all attracted to things that we think are well designed, whether it's face wash or a car or, you know, whatever it is. Design matters. And I think that's what it really all boils down to for me is the way that we approach any market should be interesting or comical or, you know, whatever fits that demographic, but it all boils down to design at the end of the day.
Yeah, no, that's I like it and I agree. So we're coming into the end of a year. It's that time of year for, you know, New Year resolutions. What are we aiming for in the new year 2026? So I'm gonna give you that opportunity. I'm curious, you know, for 202 Wear, looking out into 2026. What's a Christmas wish for you? What's something you're maybe planning to launch or you're excited about for the next year that people should have on their radar?
Well, I really hope that Santa shows up in Bitcoin orange instead of red.
Yeah.
But as far as things I can control, we are actually giving the magazine a facelift, and we're renaming it, since the magazine was named Living 202.
Yep.
But now that that's the name of the nonprofit, we're actually renaming the magazine and giving it a facelift. And I am so excited to release that, because it just leans even further into the fun of it that I
Awesome.
think everyone will really enjoy. And I think that's kind of the main thing on our plate right now. Is
Do we have
really
a hard
just-
release date for the new magazine, or will you keep us waiting with bated breath?
That is a good question. Our goal is the 1st of March. So
Okay.
don't hold me to that, but that's the goal.
You got some runway. You won't be held to it. We look forward to seeing it, and you got enough time to, you know, make a splash with that, and we'll be rooting for you along the way.
Well, I really appreciate it. Thank you.
Thanks for coming on, Billy.
Absolutely. See you later.
Yeah, it's awesome. I was checking. It's been a while since I've checked out the website, and just all kinds of cool merch, and the design angle really does make a difference. If you make stuff that people don't like or want to wear,
Don't throw it away.
you're headed nowhere fast. We know that from all the conferences we go to. We collect little doodads that the kids play with. But thank you, Billy, again for coming in. What a fun day in the markets, and it's setting up to be a very eventful kind of last week before we kind of shut things down for Christmas. So we'll continue to keep an eye on that and bring guests here and report on it on Texas Capital Live.